elected treasurer July of 2023 in Phoenix. Now, professionally, besides taxes, he is a real estate broker licensed in both Tennessee and Mississippi. But his focus is tax resolution problem solver and formerly area supervisor for finance company, management analysis state of Mississippi, investor with real estate properties in both Tennessee and Mississippi. He's married to his bride of 54 years. Firstborn daughter is a doctor of veterinary medicine, 2 grandchildren, second-born daughter, deceased, but she was a registered nurse and gave them 2 grandchildren. His education is from the University of Mississippi, Ole Miss, and SEE, Special Enrollment Examination Enrolled Agent of the IRS. We love you anyway. And practitioner admitted to practice before U.S. tax courts. And he's a CTRS certified tax resolution specialist. And one interesting fact, this guy graduated from Ole Miss at age 20. Wow. So let's give it up for Ken.
Oh, can you use your fingers?
Yeah, I can.
Sorry.
Good morning, Talk Shop. Thanks for that introduction, Lynn. Lynn and I and Troy have been friends for a long time and business associates, colleagues, and I welcome that and I'm glad to do that part to help Talk Shop. Today, I wanted to talk about some things that are coming up that business owners and operators would be interested in. My job really is simple. I meet with people on the worst day of their financial life and try to help them solve the problem. So that's what I do. That's what I specialize in. And I want to share with you today some of those changes that are coming up that might affect you, that might affect your friends or families or colleagues. And we'll talk about some of those reasons as we go through the slide projection. The IRS has more resources now than they've had in probably the last 20 years. Congress, as a part of the big, beautiful bill, funded the Revenue Service more heavily. They gave them dollars for equipment, which they have many computer systems. Many are outdated and unusable. They can't find people to run the software. They can't find people to operate the systems. So there's a major upgrade going on in computers with the Revenue Service. So that's going to give them better technology. It's also going to give them stronger matching capabilities. And that's important to you as a business owner or as a taxpayer, because when records are produced and submitted to the Revenue Service, their higher level of expertise with technology means that they'll be able to match things more quickly and more precisely. I remember a taxpayer once told me, well, the IRS will never notice this. Well, the IRS might not, but their computers will. So you might remember that their computers never sleep. They're on the job 24/7 all the time. One of the opportunities that the One Big Beautiful Bill allows is things that you as an owner and operator can benefit by. And part of that is increased retirement opportunities. Many of you are not to retirement age, and that's good. That's the time to really be focused on planning and thinking about what the future means for you and making those plans and opportunities, taking advantage of things that help you now and in the future. Some of those things that the IRS has expanded is self-employment plans called SEPs, SEPs. They are like an individual retirement plan, but they're for businesses. It can be done with a single member Schedule C business. You don't have to be a LLC or an entity, an S4 or a partnership, but you can do it even as a sole practitioner with a Schedule C business. Also, another one is a solo 401k. A lot of these plans, you might think that if you are a W-2 wage earner and you have a retirement plan in your employment, you can't use an individual plan, but that's not exactly true. because you can take advantage of these plans that help you outside of your retirement. They're treated like a Roth retirement plan. And that Roth plan simply means we'll pose for the camera. I'm a foreign photographer, okay? Yeah. I get it. Don't be talking when they're taking pictures. But the Roth gives you the capability to fund the plan in after-tax dollars. It's kind of like delaying the tax. When do you want to pay your tax? Okay, if you use a traditional IRA and you don't have a retirement plan with your employer, then your income is reduced, so you pay less tax. But when you take it out, when you take the distribution, then you pay tax on it. The Roth kind of turns that formula around. You pay tax on the earnings and then you invest, whether it might be a SEP or a solo 401k, or you might use it to put into one plan that you already have in existence as a catch-up contribution. At certain ages, you can do that. And then that gives you a growth in your own independent retirement plan. So that's a big, big plus. And you might remember that really the best tax deduction is the one that you keep for yourself. Okay? Well, why does this matter right now? We talked about earlier the increase in funding in the revenue service, and that means bigger, better for the IRS enforcement. That means they're going to be looking at things that they are using a fine-tooth comb that may not have been recognized in years past, but they're going to pick up on those things because they have the technological advantages to take care of those without additional human power. Okay, they're using technology, AI, artificial intelligence. And remember, those computers don't sleep. Okay? Also, one of the things that you as a business owner might be interested in is a 1099 requirements. And you as an individual may receive a 1099. It may be a NEC, which is a non-employee compensation. It may be a miscellaneous. That would be something that is truly miscellaneous. It might be if you're a landlord or an investor, you might receive a 1099 for rents or for royalties. And you think, well, that's great. Well, I talked to a contractor one time, and the contractor said, well, I got 4 1099s. I reported 2 of them. I said, well, how many do you think the IRS saw? 4. So if it's reported, they know it. If it's reported, it goes electronically to the revenue service, then they're going to match that to the Social Security number or to the EIN, the employer identification number, if you're an LLC or a partnership or a S corporation. The IRS is good with numbers, okay? And those computers don't sleep. They are always on alert. One of the other things too that's with the new big beautiful bill is the continuation and enhancement of some of the energy credits. Some of them really don't apply in the South, okay? Like geothermal, okay? Heat pumps, okay? Some people even have windmills, wind power. A lot of people have solar. If you've been out to Millington, you can see that that's one of the biggest solar spots in the whole state of Tennessee. When they sold the stables to the investor, they put a network of solar panels there over about 300 acres. Now, just south in Lucy, right down 14, they have probably 100 or 200 acres of solar panels. So they're selling a lot of juice. Okay? And part of that is going to fund some of the industries that are coming in to Tennessee and North Mississippi. Also, those are available for credits for you as an individual homeowner. This year, I helped a taxpayer who changed out their windows and doors. That's energy efficient. They put in about over $10,000 and they got like $1,200 as a tax credit. So it's important that if you're doing those home improvements, you track those caveat, documentation is important. You have to provide with that a QMID. Tax guys and the IRS love an acronym. Qualified Manufacturer's Identification Number. Okay. If it's not there, no deduction. Okay. So make sure if you do things like that, you do home improvements, look at the invoice. The installer or the provider, the manufacturer, is required to give that to you on the paperwork. So it's important as you take advantage of some of these energy credits that you document those well. And a lot of these, there's caveats on them. They only apply to new construction, okay? Or there are ones that apply to existing structures. It can apply for a homeowner. It can apply for an investor. Any investors in the room? Okay. You want to update one of your facilities? Your tenant wants a better, newer, nicer, more comfy place to live? You can do the installation and get a tax credit. Okay. So again, tax law is written for people that use deductions. They're available for all of us. But if you don't use them, you don't know about them, you lose out and you pay higher tax. So I'm here to try to help you. And remember that the documentation piece, no documentation, no deduction. Okay. What about tax matters solved? What do we really do? As I said, we meet with taxpayers probably on the worst day in their financial life. They've gotten the letter. They're scared. They don't know what it means. They don't know where to go, what to do, or who to turn to.
Wait a minute. There you go.
Sometimes you have to wait on the photographer too. But if you get the letter, or if you get a notice from the Revenue Service, remember it's going to come as a letter. Okay, the IRS is not going to call you as a first action. They're going to always send you and notify you by letter. So once you receive that letter, it's important that you know your options. And a company like Tax Matters Solve and I specialize in these and can help the taxpayer. If you've got a tax, you may have penalties, you may have interest. We can work with you and work with the Revenue Service to mitigate those taxes. We can do it by installment plan. Can't pay it all, maybe you can pay it over time. If you can't pay it all, we may negotiate a partial payment installment agreement, PPIA, another tax name, okay? But that just means you're going to pay less than the tax that the Revenue Service alleges that you owe. Sometimes they get it wrong, so don't take their word as gospel. Get advice. Offers and compromise. This is where they might have got it right, but there may have been some mitigating circumstances that the Revenue Service didn't take into consideration. As you work with a professional, you can identify some of those things that might be such as a not collectible currently, CNC. And that might be a different reasons, or as to liability. You may not actually owe that tax. The Revenue Service doesn't have all the information. Or collectability. You might not be able to pay at this time, and they can pause that and put it on hold. So an offered compromise is another. Penalty abatement. I love this one. FTA, first time abatement. Not just the first time, okay? First time, yes. But if you got a clean record for the past 3 years and you had one 4 years ago, you're current, you're compliant, and you get the notice, FTA, first time abatement, again, okay? And again, you got to work with a professional that knows the law and knows how to apply it in your situation so that you benefit from that. If it comes down to the real intense negotiation, you need somebody to represent you, okay? You wouldn't go to a dentist and try to pull your own tooth with his pair of pliers, okay? You wouldn't go to a activity in court and not have a lawyer, okay? So you need representation. That's one of the functions that we provide. And we do it, I do it nationwide. My enrollment allows me to participate in any enrollment anywhere in the United States. So I have that capability. I'm not a lawyer, but if we need to elevate it past the revenue service, the option for the taxpayer is to go to the U.S. tax court. So I'm admitted to practice in the U.S. tax court and can represent taxpayers at that level, just like an attorney. Remember, IRS problems rarely improve when you ignore them. So pay attention, respond to them. Okay? Corporate transparency. This doesn't affect a whole lot of people, but if you have multi-interests, you're a member of multi-member partnerships or things that are very intense and detailed, you may be required to file with the FinCEN, the Financial Crime Entity. Also, if you have a foreign bank account and you have a balance of over $10,000 at any one day, you're required to file with the FinCEN on your return. So corporate transparency is becoming more and more prevalent with the Revenue Service. We talked a little bit about expenses. That's another way to reduce your tax burden, but the IRS really looks at those very closely. And those things might be vehicle expenses. Anybody got a log that they keep for their travel? Anybody use an electronic log? It's easy. There's some free technologies out there that you can put on your cellular phone and it tracks you automatically for your mileage. You have to go in on a daily or weekly basis and tell it which are business and which are personal miles, or you can program in there the commute miles from your home to your office and it'll automatically label those. But logs are important if you're going to take vehicle expenses. No documentation, no deduction. Home office. Anybody use a home office? Okay. That's a good tax deduction, and you can take a part of your expense of a home office on your return. Have to document it, and it's at the employer's convenience if you're working for an employer. If you're self-employed, then you can use a home office as your primary business spot where you meet with customers, you do administrative work, and you use that as a true home office. Meals, you might like to eat. Amen, brother. Depending upon the purpose of the meeting, depending upon the documentation, okay? If you're meeting with clients, it can be up to 100% deductible. Most meals are going to be 50% deductible. Same with entertainment, but you got to document it. You got to remember that you talk about who was there and what business matters you discussed, and then you're good to go. You got the documentation. Another one that I like and the Revenue Service loves is Lux. Great name, okay? Large, unusual, questionable expenses. Say you owned a flower shop and you bought a $200,000 dump truck to bring the soil in to pot the plants. Little large, little unusual, very questionable. Red flag from the Revenue Service, okay? Consistent large losses on your Schedule C business. If you're losing money every single year, it's not a business, folks. It's a hobby. And the Revenue Service will come in and disallow those. I'm going to have to speed up a little bit, so let's put your seatbelts on and move. Let's move. Okay. Gig economy. You may not be in the gig economy yourself. You may be. DoorDash, Uber, online work. If you sell things, eBay or Etsy, another source of income. The Revenue Service defines income as any and all revenue earned or received regardless of the source. That means everything, folks, okay? Gig economy, more income. I talked to a taxpayer once, said, oh, only about a couple $100, and then they got the 1099K. That's a new form that they have, and it shows all of your transactions that you do on a credit card or whatever, and it's thousands. And it takes into concern those personal things where you might buy a meal to entertain somebody. It's on there. They might pay you back, okay? or they might do a credit card. Look for those 1099Ks. They're important, and you'll get caught up in that in the gig economy. I remember one. I'm gonna be real quick on this one, but I represented a taxpayer one time who had a gambling habit. He called it gaming, enjoyed it, okay, pleasurable. He made a lot of money sometimes. He lost a lot of money, always lost more than he won. One year, he won over $40,000 at one time from one casino. Every year, he gets the W-2Gs, and he may have hundreds of them. They only issued if you have a winnings of more than $600. But this year, when he filed his taxes, he wrote the debt off. Revenue Service flagged the return, and they said, let's see your documentation. All right, documentation? Yeah. So he comes to see me, and I sat down with him and his wife, and we went through a calendar of the year, and we were able to build a record there of the times that he went to the casinos based upon receipts for hotels, for gasoline, for meals. We could tell the dates. $40,000 they tried to say he had a winnings. They charged him $14,000. When we presented the documentation to the revenue officer, poof, gone. They rescinded the filing because the documentation was there. He learned a lesson. Now he carries a calendar. And he goes, he records every day, he takes the money that he goes in, how much he wins, how much he loses, and what he takes home. What's the cost of waiting? Levies, fines, liens, penalties, wage garnishments. It can all happen if you're non-compliant. So remember, the IRS is not going away, but the problems can be solved. Really, when you look at that, ignoring the IRS is really expensive. If you take one thing away today, remember that good records beat good excuses every time. Early action solves the problems. Remember, if you hear anybody say, I got a letter from the Revenue Service and I don't know what to do, remember my name, Ken Sullivan, Tax Matters Solved. Thank you very much.
Wow, okay. Any quick questions y'all
Got a
have?
question, Ken. So how do you respond to inquiries from the IRS that you get in an email?
They're generally not going to send emails.